We have Willem-Mark Nabarro. He's the head of European equities at Exane BNP Paribas, and he recommended stocks such as Roche, Novartis, and Deutsche Telekom last month on our program. And all these stocks are up 7% since then. So, William, looks like your defensive calls have worked pretty well in the past 30 days. Let's first, though, get to the outlook broadly, I guess, on European stocks. So people want to know, is the worst over?
Well, the worst over, effectively, probably for Greece. What we have been saying as well, there's going to be a lot of talk on Greece, a lot of talk as well. We have had in the past also on Portugal, on Italy, on Spain, on Ireland. Is the worst over? We will see. We will see effectively what comes out of this famous trip Mr. Papandreou is going to have over the next few days. Seeing Mrs. Merkel and Mr. Sarkozy as well. Apparently he's going to see Mr. Obama. But it seems that we're going into the right direction. Again, this was short-term noise. I think it's more important to look at the longer-term outlook, and the longer-term outlook for Europe remains still pretty positive.
Okay, does it really? Because the Europeans' earnings season is almost over. I mean, what do you think of the results so far and the profit growth?
Well, the results effectively were more or less in line. We have had some very pleasant surprises as well. However, effectively, if we look at the EPS consensus forecasts, they are way too high, what we have been saying, and we've been warning them for this on several occasions as well. For 2010, we're looking, for example, for an EPS growth for at around 15 and not at 25, where most of consensus is hanging for. And that's also why we're committing and saying, look effectively at the dividend stocks, look at the value stocks, because that's where you're going to make the money. And it's definitely not in the growth stocks, because there's not going to be a lot of growth in Europe, nor in the rest of the world, as far as we can see.
Okay, what about valuations in Europe at this point, William? I mean, European stocks are generally trading at lower valuations than those in the U.S. and Asia, but on an earnings and book value comparison, do you think that maybe we'll see more money flowing into Europe at this point because it looks cheaper than the rest of the world?
Exactly what we have been saying as well. It is, of course, much more interesting at this moment of stage. Also, well, for people who are also obsessed by the euro, at 137, it's probably becoming more interesting as well. For the exporters, that will be something. The European exporters, it's going to be much better as well, of course, to have a lower euro. So you can even say, if you want to play the automotive sector, although we are not positive on this sector, you might even start looking at BMW and Daimler, because they are, of course, going to be the main gainers in this one. However, effectively, this is not something we would be pushing too hard for, to be honest with you. We remain effectively more on the defensive stance. If you want to have some spice in your portfolio, look at that moment of stage on the semiconductors. That's definitely a sector where there's a lot of money to make. If you look at the order books, they are very, very full. Going forwards as well, the orders are new orders. They're not rolled over orders. And look at the valuations effectively of the European semiconductors. They look very, very interesting. But I would definitely want to point out Infineon, ST Microelectronics, as well as ASML. And if you can look at smaller ones, look at a company like Extron, for example, which might also be a takeover target.
Yeah, that's very interesting. So the semiconductors then might be better placed, considering we might be seeing the inflection point for the drag down in chip prices. Okay, well, William, let's get to what we brought you on to talk about, which are the insurers, because you said that they're actually not that interesting, especially the Pru one. Pru, the UK's Prudential, even after that $35.5 billion buyout of AIA. But what do you think of this deal, and what do you think of Pru in general?
We don't have official coverage of Pru, but I'm sure that the gentleman who's running Pru at this moment of stage knows what he is doing. If you look at his resume, he's a very, very, very strong CEO. We will see effectively what comes out of this deal. It looks very expensive, to be honest with you, what they're paying, 2.5 times book. If I compare that to a company like ING, which is trading at 0.7 times book, and which is restructuring, and where a lot of things, very interesting things are taking place. For example, everybody is saying that ING is a forced seller of their insurance business, which is definitely not the case. If I also look effectively at the Asian business of ING, which we are looking at 1.5 times book, effectively, if they are supposed to sell, say, their insurance business, if we can take in comparison with what Pru is paying for AIA, 2.5 times, I'm not going to say that, of course, everybody's going to pay 2.5 times for ING. But even if we remain with 1.5 times and the rest we take at 1 time, there is massive upside potential for ING. So I think effectively that it's more interesting at this moment of stage to make investments in ING than, for example, a Pru or an AIA.